Hi guys, this is your girl Angenett Curry with Prospective Vision Solutions LLC, doing business as PBS Financial Coaching and Services. And today I wanted to come to you to talk about how to become your own bank. I know a couple months ago I kind of talked about that. And if you are a member in my 724 private Facebook group, this is a whole guide that I have. And I have videos and I go into more detail to show you exactly how to create your own banking system. Now, what I am talking about is how to finance your life, which means how to purchase a car, how to purchase a home, how to purchase major items that you can have where you would normally go to a bank to borrow money to purchase a home or to purchase a car. There is an entity that I'm going to show you today to where you won't even need the bank anymore. Yeah, amazing, amazing. So sit back, get your notebook, get a pen, and we are about to break some generational curses, guys. I stumbled up on this as I was doing my research, trying to find ways of investment, better ways to save money, other strategies outside of just opening a 401k, a Roth IRA, or a retirement account. So, this was one of the strategies that a lot of rich people use. I know the Rothschilds use this, the Vanderbilt family used this, and this was developed, I believe, by the Rothschild family. So let's get going. Now, I'm going to dive into setting up strategies that will allow you to never have to borrow money from a bank again. Now, about Angenett Curry, I am your presenter. If you've been following me for a while, you know that I love to talk about money, right? I love to talk about managing your personal finances. This is what I do. I provide workshops, webinars, face to face personal coaching. I also go to schools and I provide free workshops to community organizations like Boys and Girls Club, Park and Rec, Department of Human Services, anyone that work with adults and children that are low income, struggling, that are trying to get them their life together, wanting better. I am your girl. So if you know of an organization that would love to book me, reach out. I'm going to put my information at the end. You can call me, email me, or text me, and we can get something set up. Okay. Now, I'm going to read this. I like to read who I am so you can get a better understanding of what I do and why I do what I do and who I am, right? So, Angenett Curry is the owner and operations manager of Prospective Vision Solutions LLC, PBS, doing business as PBS Financial Coaching and Services. PBS is a certified minority woman owned small business that's licensed and bonded in the state of Mississippi. PBS is also a registered business with SAM.gov. Angenett Curry provides a total money management program by conducting comprehensive financial literacy webinars, seminars, workshops, and one on one training. Their signature service is the 9-month financial game plan package, which includes the creation of a vision board, budget setup, savings and investment education, free credit repair and disputing services, student loan restructuring, and strategies for obtaining capital for personal loans. Anjanette also has a program for youth ages 8 to 19 that's designed to teach bill payment, investing, job security, conflict resolution, and integrity. She also has books, ebooks, and workbooks that teach money management. These items can be purchased on Amazon, Barnes& and Noble, Books A Million, Target, Walmart, and Lulu. PBS's vision is to help its clients understand the importance of managing their money, maintaining good credit, and becoming exemplary citizens in their community. Today's discussion, we're going to talk about passive income strategies, different types of life insurance, which type of life insurance is best, the things you can do with the life insurance, funding your bank, the Rothschild's method to wealth, the Rockefeller methodology, and let's create your banking system. Passive income strategies using life insurance to save money, index universal life insurance, whole life insurance, permanent life insurance, and term life insurance. These are all different types of life insurance that provides cash flow, which means that it accrues cash over the years while you're paying your premium. It also builds cash that you can use while you are alive. And this is why we call it banking, creating your own banking system. Okay. Life insurance has been around for centuries. The wealthy has used life insurance as a way to safely save money and to create a personal banking system in which they use to fund major purchases and build a financial freedom legacy that is passed down to their children and grandchildren. The truth is that you're going to purchase life insurance anyway, right? So why not create an extra incentive by using it as a savings method? This is my tier um, step ladder to use when you're creating passive income, when you're creating retirement income. I always say create your high yield saving account first. Okay. Then I want you to create an emergency account, which is through a high yield savings account. Make sure you check with your bank to see if they offer a free high yield savings account. If they do not, then you need to put your emergency account, your emergency money into a high yield saving account. The reason why I say do that is my rule of thumb is if I'm going to be investing in you, then I believe that you need to invest in me. If I bring my money to you, then there should be an incentive for me to do business with you. That's the purpose of the high yield saving account because it accrues interest monthly as your money sit in there. So you're going to have your money sitting there for years. So they need to be paying you um, an incentive for you doing business with them. Now, a regular savings account only accrues about 0.03, not even a fraction of a penny, right? A monthly. So, with a high yield savings account, it can go from 0.30% all the way up to 3%. So make sure you do your research. Go with the highest high yield savings account and make sure it's free. Make sure there's no monthly um, fee to have this account. And make sure that it's liquid, which means that if you need the money right then, it's available to you and there is no hold for pulling your money out or there's no cost for pulling your money out. Okay. And then the next one is a Roth IRA or a 401k with a match. Usually you can get this with your employer. Most jobs, full-time jobs, offer this incentive, which means that you can get a 401k retirement plan or a Roth IRA retirement plan. And what they do is take a portion, a percentage of it out of your check when you get paid, and then they may offer a match, which means that some companies, I think the highest match is about 6%. So you tell them you want 6% taken out of your account, and then they're gonna match 6%. So that's 12% per year that they can match. Okay. And then the next one is index funds. You want to um purchase index funds through the stock market. And the reason why I say that because this is the quickest way to build passive income. All you do is just having that money sitting there. Now, this is a long-term account, which means that this money needs to be sitting in there about 20, 30, 40 years, okay? So it depends on how old you are. So this is something that's going to be long term, guys. This is not something that's overnight. This is not something 1, 2, or 3 years. This is something for 10 years or more. Okay. And then investments, rental properties. Once you have your high yield savings account, your emergency account, your Roth IRA account, your index funds, you're buying through the stock market, and then you want to start using your savings account money. I always tell people that's the purpose of it. Or you can create a dream account. I have a dream account for things like investments. So, rental properties, you need to really think about rental properties because right now, the people that have rental houses, they are charging up to 40% more than when COVID hit. So they are making a lot of money, okay, by renting out houses. People are going to always need somewhere to stay. So you're going to, depending on the location, as long as you're not way out in the county somewhere, if you're in the city, more than likely, and if it's a nice place to live and a safe place to live, more than likely it's going to be rented. Okay. And then permanent life insurance. This is what I'm going to talk about today is permanent life insurance. I want to dive into more about how to use permanent life insurance because you're going to buy life insurance anyway. So why not figure out a way where you can get an incentive while you are buying permanent life insurance? So, a brief history on the type of life insurance. Let's dive into the differences, okay? So, we have term life. This is your typical life insurance that you probably have now. It does not have a cash value, okay? And it's the least um cost effective one. You can get probably $50,000 for like $10 or maybe $20 a month. It may be less than that. It depends on how old you are, your age, and it depends on how healthy you are. So this lasts for a specific number of years. You can get it for 20, 30, 40 years. So it depends. But if you die, let's say if you don't die within that time frame, the policy expires with no payout, which means that let's say they write you for a 20-year policy term life. What that means is you pay for 20 years. If you don't die before the 20-year mark hit, that insurance lapses and you're left with no insurance, which means that let's say you're 30 right now, you get a 20 year life insurance. That means by the time you turn 50, that life insurance is going to lapse. What if you're still alive? Which means you're going to have to rewrite life insurance at age 50, and it's going to be more expensive than when you were paying for it for the age of 30. So, what you need to do is look at your age and then determine how long you want that life insurance. And I think the highest term they have is 40 years. So let's say you get it when you're 40 and then you're adding 40 years to that. So let's say when you turn 80, you are still alive. That insurance is going to lapse, and then you'll have to write the policy again at age 80, and it's probably going to be triple by the time you turn 80. So this is something to think about. And I think a lot of insurance companies don't explain this more in detail to clients because a lot of people just want life insurance and they want the cheapest life insurance, but they don't know about other things to help them along the way that can accrue cash value because they're going to buy life insurance anyway. Why not get the best um, and cost the best insurance that accrue cash value that can help you fund your life? Okay, let's talk about whole life insurance. Whole life insurance typically lasts until death as long as you pay the premium, which means that you can write, 30, 40 years, and as long as you're paying your premiums, they have a pay up rider, which means you can add a pay up rider, which you can pay the policy off within a certain amount of years, and it will last until you die, which means that there may not be a cap on it, but make sure you talk to a licensed insurance carrier that knows about whole life, universal life, variable life, and index universal life. Okay. Now, usually more expensive than term, but builds cash value. Payout is contingent on stock market performances. And what that means is as the stock market fluctuate, the payout, the percentages of the cash value will fluctuate just like the stock market. It fluctuate, but there may be a cap on it. It depends on what type of policy they write for you. So that's why you need to get with a knowledgeable insurance carrier that is experienced in writing these type of life insurance policy. Universal life. Death benefit is guaranteed with set monthly premium. Little to no cash value. If the policy lapses, you lose everything you paid in. Okay. So what that means is let's say you get a 40-year universal life insurance policy. Something happens, you get sick, you can't pay the premium, you can't afford to pay the premium. So you've been paying in for 5 years, right? And then the 6th year you get sick and something happens and you can't pay the premium. So what that means is if that um, life insurance policy lapses because or terminates because you can't pay the premium, you done lost everything. You got to start back over at the age you are now, which means that um the premium is probably going to be more expensive, and then the cash value and the amount of money that you accrued you may lose. Okay. Variable life. Cash value is tied to investment accounts like bonds and mutual funds. Premiums are fixed with guaranteed death benefits. Cash value accumulation is dependent on the stock market. This one is also dependent on the stock market. As I said, it fluctuates as the stock market goes up, as the stock market goes down. Your percentages of cash value is contingent to how well the stock market do. Now, there is a way that you can kind of counteract that is by getting a cap. Some insurance carriers offer a cap on some of their variable life insurance policies. So make sure you ask that question. I'm going to talk a little bit more about that later on in this slide, okay? Index universal life. You get to choose the investment amount, and gains are determined by how you set up the policy. Typically has a cap on participation rate but has a guaranteed interest rate. Also offer add-ons. And this is the policy that I have. I have an index universal life insurance policy. The one I have has no cap on it, which means that um the ceiling of it, I can go all the way up to 15%. It depends on how well the market does. um I can accrue cash value as um evaluated by the stock market. Some policies have like a 6% cap, which means that it will not go over 6%. Some have like a 2% or a 3% ceiling, which means that it will not uh, value over the 3%. The one that I chose, and I talked this over and did some research, and this is the reason why I got this one, is because of the research that I did. I found out that it does not have a cap. So I can make up to 15, 20%. It depends on how well the market does. And then if the market drops, I do have a cap on that. The lowest that my evaluation will go, or my percentage will go, is I believe 3%. And I think that's on my policy. The lowest it will go is 3%, which means that I will always make money. I may not make as much, but I will always make money. I will not lose money. I will always make money. So again, make sure that you get with a licensed and experienced insurance carrier. PBS Financial Coaching. I'm going to read this disclaimer so you guys know and understand about why I am doing this webinar, and to let you know that PBS Financial Coaching and Services strives to keep its information accurate and up to date. This information is for educational purposes only. Please seek the advice of a life insurance company before choosing a life insurance policy. Only choose a policy that benefits your family structure, health, and financial needs. Now, which type is best? Depending on your needs and objectives, these are the questions that you need to ask yourself. Do you have a spouse or children that depends on you? Yes or no? Will you have items that may need paying off, like a house, a car, or a loan, anything that you will have to pay off? Do you want to leave a legacy for your family? Which means that you want your family to not have to struggle, to not have to live paycheck to paycheck, to where they can build and have a better life. Would you like the opportunity to build cash value to use on large purchases like purchasing a home, buying a car, paying for a wedding, um, remodeling your home? Would you like to build cash value on that policy if this is something that you would like to do? Right, yes. Are you creating an investment portfolio to strategize passive income? Will this insurance policy be part of your investment portfolio along with your savings, your investment accounts, your emergency accounts, your 401k? Would this be part of it, or would you like for this to be part of it? Okay. Now, with term life insurance, if you are single and do not plan to have children, if you do not want to leave your family anything, if you want to the cheapest premium, then this is where you want to be. Term life insurance, okay? Whole life insurance. If you want access to term and build cash value, if you're okay with risk, which means that the cash value will fluctuate, if you want to insure coverage until death, then whole life insurance is for you. Universal life. If you want to keep the same payments month to month, if you know you are okay with accruing little money, which means that it may have like a 2% or a 3% cash value accumulation, which means that it may not do as well as the stock market, but it will accrue cash value. Okay. Then if you know you're not going to change policies, then universal life is for you. Variable life. If you're okay with investing in the stock market, if you're okay with risk, cash value fluctuate, and if you need another way to save money. Again, this is part of your retirement portfolio. You're trying to create passive income, and this could be one of your strategies. Not the only strategy, one of your strategies, okay? Index universal life insurance, if you want fixed payments until death, if you want to control what you invest in, if you want a safer way to invest money. With my index universal life insurance policy, I chose um the the um the policy. I chose what I wanted. I told them how much I wanted to pay, and then they determined the insurance value by what I wanted to pay per month. Okay. So if you wanted control over that, then the index universal life insurance policy is for you. The things you could do with life insurance: infinite banking, using your cash value to pay for life purchases, 5 to 10 years and paying premiums. Remember, this is something that's long term. This is not a 1 to 2 or 3 year ending. This is something that you want to do from 5 years to 20 or 30 or 40 years, depending on how old you are in your retirement age. This is long term. Okay. We're building retirement income. Okay. Now, private family banking. Okay. Withdraw the cash surrender value without having to pay it back. Get an interest free loan to purchase an automobile. Use the cash value to pay the down payment and closing costs on a home loan. Use the cash surrender value to pay for your wedding. Borrow the money as a personal loan to buy whatever you want. And the money is still accruing interest every year if you have to borrow that money. That's crazy, right? So you can use this as a private family banking. And this is what they're saying is to fund your own bank, how to create your own banking system, the infinite banking system. This is what they are talking about. You don't have to go to the bank anymore and get those high interest rates, or getting declined for loans, or having to prove your income. They're asking for paperwork and you're waiting 24 to 48 hours, and then you got to go through underwriting and all that stuff. If you use the infinite banking system, then this is your pass go, right? You get to pass go. You get to pass first base and go to second. Uh, and this is your way of creating a legacy for you and your family. Now, you can also use the infinite banking system to pay for college. You can withdraw the cash to pay for tuition, books, and housing costs. You can use it to pay bills while you're staying at home to concentrate on school. You can use it to pay for children or grandchildren college costs. You can use the cash to buy a car for transportation to and from school. You can borrow the money to buy a computer or a laptop, and the money is still accruing interest every year, which means that, let's say you get $100,000 policy, that $100,000 policy is still accruing interest even though you took out a portion of that money. Okay. Now, you can also use the infinite banking system to fund a business. You can withdraw the cash surrender value to invest in a franchise. You can get an interest free loan to purchase equipment for the business. You can use the cash value to purchase rental property like event spaces or car rental businesses. You can use the cash to lease a building, or you can borrow the money as a personal loan to renovate a building. And you can invest in other businesses. So, say you have a friend that has a business that you would like to be a partner in. You can pull money out of your um, life insurance policy. You can pull money out of that to invest in your friend's business if you want to partner with them. And it's interest free, which means that You don't have to pay the interest. But I always tell people, if you're going to pull money out, make sure you pay it back. Now, let's talk about funding your bank. Where does the money come from? How do you fund this infinite banking system? How does that work? Let's talk about it. So, I meant to pull up the video to show you guys this, and I see that it's not gonna play while I am recording this. So, I will put the link in the description box. Make sure you go below in the description box and click on the link so you can listen to this, because this is how you're going to fund your infinite banking system. It's going to tell you how much money you really need. And it's going to give you the rate of return on index universal life insurance, the type of life insurance policy that I have. Now, the index universal life insurance policy may not be best for your situation. So that's why I am telling you to go and talk with an experienced life insurance person that is experienced with writing cash value policies. Okay. This is another video. I'm going to put the link below, how to structure payments. Make sure you go and click on the link in the description box and listen to this, because it's going to explain everything to you guys, okay? Now, funding your own bank. There are different ways to fund your infinite banking system. The best way is to have the money drafted from your bank account on payday. First, decide how much you are comfortably willing to fund, or to, have taken drafted out your account. Remember, this is long term and must be continued for the next 15 or more years, okay, guys? So this is something that you have to continue to do. Once you set the amount, then get with a licensed insurance agent that specializes in writing the permanent life insurance policy we went over. The agent can bundle your policy according to your monthly premium payment. Make sure you let them know that you want a PUA, which is a paid up addition rider, and a term rider. The PUA is the time frame you want the policy paid off, which means that you don't want to pay a whole 40 years. Maybe you want to pay it off in 20 years. Okay? And that's what the PUA is. The term rider is an add-on term life insurance policy, which means that you're getting the term life insurance policy, but you're gonna pay it off in 10 or 15. I got mines where I'm gonna pay mine off in 20 years. So even though I may, you know, expire or transition at age 80, mine will be paid off in 20 years, and then I don't have to worry about continually paying that policy off when I'm in my 70s or 60s or 80 years old. I don't have to try to figure out how I'm going to pay that policy. While I am working, I am paying up the the amount so that way it will be paid off by a specific time. The term rider is an add-on term life insurance policy. This is important in order to fully maximize your infinite banking system. Okay. Now, check out this website for more information. Make sure you write this down or save this slide or come back to it. Okay. www.bankingtruths.com. So when I was doing my research, I found this website, and it gives some really really good information on index universal life insurance. It elaborate more than what I can provide in this webinar, and you can get more strategies on how to set up your infinite banking system. Disclaimer, I'm going to give out another disclaimer. I have to give this out. I am not an insurance agent nor a financial advisor, and I do not make claims to be. Please consult with a licensed financial advisor and insurance agent to make sure what works best with your personal and financial goals. Now, the infinite banking system explained. Again, sorry, the video is not working while I am doing this webinar because I'm doing it through Canva. And for some reason, it won't play the videos. So, again, the link will be in the description box. Make sure you go below to click on the link. Guys, please make sure y'all watch these videos so you can get a better understanding of what I am talking about. The videos will elaborate more and give you more clarification on how to set the infinite banking system up. Now, steps to selecting an IUL carrier. Setting up your infinite banking system. What is the minimum floor on the IUL cap? Now, this is something when you get with your insurance carrier, make sure you ask them these questions. Okay. It is very important. Write these questions down so that way you can ask them these questions. And I'm going to explain why you should ask these questions so you can get a better understanding to make sure that they are setting up the IUL Index Universal Life Insurance Policy to fit your specific family needs, your income structure, so you don't lapse on your policy, and then make sure it covers what you want, what type of legacy you want to leave for your family. Now, what is the minimum floor on the IUL cap? You ask these questions because this is the lowest interest rate your IUL will make on the worst day. It is usually 3 to 6%. Mine is 3%. But I have no cap on how much I can make. But this is just say if your policy, the interest rate drops because of the stock market, mine will always make at least 3%. I will always get at least 3% return. Okay. Some policy has zero, which means that it could drop all the way down to zero, which means you will not make any money during those times. I did not want that. I did my research to find a policy where I will always make some type of cash value, no matter what the market looks like. And I chose that one because of that. Questions to ask. What do you do with the cap rates on your enforced policy holders once economic circumstances change for the better? Do they raise the cap rate? So you say, do you raise the cap rate if if the market crash or something happens and the interest rates drop, the stock market does bad? How does that work? And see what they tell you. Another question. Does the rate change over time? Does the cap rate stay the same after I sign the contract? Make sure you read over the contract when they send it to you. Some companies tend to quote a percentage, then list something else in the contract. So when you get that contract, whatever they told you, make sure it is in the contract. Okay, guys? Please do your due diligence before signing the contract. Make sure cap rates remain stable. Make sure they do not fluctuate, because if they do, then you could find yourself having a zero rate, which means that if the interest drop to zero, you won't make any money. And sometimes you'll lose money. They'll pull from your cash value um because the a negative. So make sure you talk with a your carrier to make sure that they have your best interest. Okay. What's the attributes of an IUL? This is what you look for when you are selecting an index universal life insurance policy. Okay, make sure that you can get a guarantee. It carries a guaranteed 0% loan rate, which means that um it does not um how can I put it? If you have to borrow money after 5 years, now this is after 5 years, you don't have to pay interest on it. There is no interest on it after 5 years. Make sure you check on that, okay? The interest in arrears, which means that the interest can, like after 5 years, that the interest is in arrears, which means that it does um stack. Okay, so make sure that the interest is in arrears. Daily sweeps. Ask them that. Do they do daily sweeps? Do they have overloan protection rider? Do they have an overloan protection rider? Make sure you tell them that you want an overloan protection rider. That's what I have. A chronic illness rider. That's what I have. Make sure you ask for that because, excuse me, let's say if something happens to you and you get in a car wreck and you get chronically ill, that chronic illness rider will pay your policy for you while you are out sick. Okay. That way your policy won't lapse if you're out sick and something happens and you can't pay that policy. Okay. Make sure you do that. The overloan protection rider, which means that it'll pay the loan off, which shows the which accrue the cash value, and then the pay up rider is that I pay the loan up before I can pay it off within a certain time frame, which is the 20 years. So I get to pay my insurance off in 20 years. The Rothschild Method to Wealth, a closer look at the world's richest family. Now, this is something that the Rothschilds do. I want you to do your research on YouTube, and I want you to Google the Rothschilds Method to Wealth. And they're going to talk about the infinite banking system, okay? Now, in the beginning, how they got started, they started banking businesses and became famous. They created the dollar instead of using gold to pay for goods and services. Also funded gold and silver mining, which means that they got started by mining silver and gold. And then what they did was they used the silver and gold as a leverage to loan um money or loan gold, and they use that to leverage their way into businesses. So how they accumulated wealth, they branched into banking, which means they started opening banks, assets management, venture capital, sovereign debt. They started the IOU era, which means that um I am going to give you gold to fund whatever you need. And then once you make the money that you need, or let's say you have a company that's digging for silver. So what they do is provide the funding and the money for them to dig. And then once they cash in that silver, then they owe the bank, which is what they call IOU. So they created the first bank to open overseas. Amazing, right? And they use the infinite banking system to do this. Networking to riches. How did they do it? They funded projects like building bridges, railways, the most notably the Suez Canal, sold large amounts of coins to England, also issued massive loans to other countries like Russia and China. So what they did was, as the miners was getting gold and silver and they were making coins with it, the miners would give them gold and silver, as a method of payment, as a method of the IOU. They would give them a portion of the silver that they got, and then the Rothschild would use that silver to create coins, and that's how they would leverage the coins. They would trade coins overseas as business entities, and so they would give them coins to buy banks or to buy businesses or things like that. So that was their trading system before they came up with the dollar. The Rothschild wealth distribution system. They built their own banking system by loaning their money at high interest rates. They used the money to acquire antique coins and sold to Great Britain and England. They used interest accrued from loans to open banks in major cities around the world, funded the coal miners to mine gold, silver, and diamonds for a nominal fee, used the interest from the loans to coal miners to purchase stocks from successful businesses. They set up trusts to distribute wealth to their children and to give stipulation as to how the money is to be spent. As you can see, the Rothschilds had a plan and made sure the plan was executed even after death. Now, the Rockefeller wealth mythology. What would the Rockefellers do? Now, as we know, the Rockefeller also used the infinite banking system. Y'all didn't know that, did you? Do your research. Go on YouTube, do your research, find out more about this, because this is something that I stumbled up on that blew my mind. It was right here under our noses. The information is out there, but of course, if you living in a low income area, you don't know anything about this. You were never taught to save money. You was never taught to invest money. We was always scared of that because we thought that you could lose money. I'm not going to put my money in there for me to lose. And but my thought is, if it's so risky, why do rich people do it? Why is this their method of accumulating wealth? Why do they use this more than anything to accumulate wealth? Huh? Something to think about, isn't it? Now, the Rockefeller banking system explained. They purchased a whole life or IUL policy. They use the accumulated cash value to purchase a home, auto, or pay for college or open a business. They pay the money back at 5% interest. This will quadruple cash flow as you pay back the loan, right? So you loan the money to your adult children at 10% interest. You have full control of loan payments and term of loan. They do this all the time, okay? This is what the wealthy do. Initial cash continues to accrue interest although the money is loaned out. This is why it's called the infinite banking system. You are now working like a bank. Amazing, right? A carefully structured whole life or IUL policy includes make sure all of this is included in your policy before you sign. You can give this to the insurance carrier so they will know what you are looking for and they know how to um, put your policy together, how to structure your policy so you can get the best um, um, so you can get the best policy possible and that you won't lose money. Okay, so it includes a what we call a paid up rider, which is a PUL. Make sure you ask for that. A critical illness rider, just in case you get sick and you can't afford to pay until to the end of your term. It will pay while you're sick. An overloan protection rider, which means that this is how it accrues the cash value. A term life insurance policy, which is your life insurance policy. cap interest rate of 6% or more. Mine is right at 3%, but you can do 3 to 6%, okay? Flexible to where you can invest lump sums in case you get blessed. And this means, let's say you come into a large sum of money, somebody gives you money, or you win the lottery, or something like that. You want to be able to deposit, like, let's say 10,000, 20,000, or $30,000 in that policy, so that way you can quadruple your cash value. Okay. Now, another disclaimer, I have to say this, guys. It is recommended that you consult with a licensed insurance agency that specializes in writing permanent insurance policies that will structure your policy according to your specific needs. This is important because some of you may not have children, some of you may have brothers or sisters you want to give, gift to, or organizations, or so make sure you tell them your needs and what you're planning to do with the money so they can structure it accordingly. Now let's create your banking system. Each insurance carrier is different and may not be able to add certain riders to your policy, so do your research. Now, step number one, you're going to decide your monthly premium, how much you're willing to pay. How much can you afford to pay? Is it $100 a month? Is it, $200 a month? Is it $300 a month? Whatever you can afford to pay, write that down. Remember, this is a long-term policy in which you will be paying for 15 years or more. So make sure it's something that you can afford to do to keep up for 15 years. All right, guys. Number two, decide which policy is best for you. Write down any questions you may have to take to the IUL carrier. Write down any questions after you do your research. Get you a notebook. Write down some questions so you'll have the questions and you won't forget. And when you get home, be like, dang, I forgot to ask about this. Okay, write your questions down. Number three, consult with a licensed insurance agency that specializes in writing permanent life insurance policy, specifically whole life, IULs, and adding riders. Okay, make sure you ask that questions. Make sure you are 100, step four. Make sure you are 100% comfortable with the terms before you sign the contract. Read over that contract before you sign it. Whatever they told you that they can give you, make sure it's in the contract. Do not sign a contract if something is left out. Okay. Do not sign that contract. Make them go back and change it and put in whatever they quoted you. It has to be in that contract. All right. Step number five, set up your account on auto draft so you don't have to worry about missing payments. Okay. Because sometimes I know life happens and you forget. You don't want that policy to lapse for nothing. Meet with your step number six. Meet with your insurance agent every 6 to 12 months to check updates and policy changes, because sometimes policy changes and they may not let you know that an update happened. Another company bought the insurance, index universal life insurance policy. Another company bought it. Another company acquired it, as they call acquisition. Another company acquired it and they may not send you the information, or your address change. Make sure you keep up and provide new addresses. If you move and something happens, make sure you send them your updated address. This is very, very, very imperative because they may need to send you some information and they don't have updated phone numbers, they don't have updated addresses, so they don't even know how to get in contact with you. They may be sending something to the old address that they need you to sign, and then you don't sign it, they don't get any information, and then you call and find out that your insurance lapsed or your policy increased or something happened, because they sent the information to the old address, and then the number that they have on file is an old number and not a new number. So make sure you update those. All right, questions. We are at the end of the webinar. If you have any questions, or after you watch the videos, if you have any questions, put them down, and I will come back and answer those. Also, you can always reach out to me. My email address and my phone number where you can text me will be in the description box. So if you have any more questions about this, make sure you watch the videos first before you ask questions, because the videos may elaborate more on a question that you may have, and it may even answer your question. So watch the videos first, and then if there's lingering questions, put them down, and I will answer those questions as I get to them. As they come to me, I'll get notifications. I have my notifications set up to where if someone send a response, then I'll get a notification that somebody responded, and I'll go in and answer the questions. All right, guys. Thank you guys for hanging out with me. Hey, yay, we got this under an hour. We got this under 60 minutes. And which was my goal, is to have it under an hour. Again, if you guys have any questions, reach out. I appreciate you supporting me with this webinar. Don't forget to like, subscribe, and share this webinar to those that you um, know that may need this information, that is looking for life insurance and is trying to build a legacy for them and their family, or just to have some type of passive income. This is another strategy that they can use to build uh, passive income. All right, guys. Peace out. Y'all have a blessed day.